Welcome back. Citigroup shares are down by about 1% today, despite the fact that they were reiterated the dominant #1 pick by Mike Mayo. Reiterate overweight, 115 is the price target. The price target also raised at Truist to 105. Farmer Jim, this is your name.
I'm totally in agreement with Mike Mayo, who I've been in sync with for a couple of years on this. The stock now trades just a hair under tangible book value. I'm going to say it again, a hair under tangible book value. Everybody else is at a premium to tangible book value. It may be really big in JP Morgan's case, around 2.4 times tangible book. It may be smaller in the case of Bank of America, 1.4. But I submit to you, there is really no reason that there should be any discount to tangible book value at Citigroup. They have been right-sizing the ship for the last 4 years. It's showing up in the results, reducing costs, increasing return on tangible common equity, and that's set to increase into 2026. Plus, there's a catalyst coming up in the soon-to-be spun-out Banamex IPO. There is a lot to like here. It's also a discount to forward multiples of earnings. It's got a great dividend yield. I mean, I could go on, but there's more to come.
Let's even look at a 3-year. I'm trying to remember how long it's been since you started recommending the stock on this show as a true believer in what Jane Fraser was attempting to do. I'm glad I asked for that, because it feels like it's been in around that time frame. Maybe you've owned it longer, but the stock is a near double over the last 3 years.
She's been in office a little under 4 years, and I've never seen a CEO not get a honeymoon the way Ms. Fraser did not get a honeymoon when she was announced as the CEO. It may have been because of the revolving door, Scott, you know this, the many CEOs who had gone through Citigroup's executive suite without affecting change. At first, the market did not believe it, but she's done the right thing. She's hived off those sections of the bank that were not earning their cost of capital. She's lent into those areas that are and that are profitable going forward, like investment banking, like wealth management. And again, this spin out of Banamex coming in the next, I think, 6 months or so should be a catalyst to then move the stock to a higher premium of tangible book value.
What's interesting is if you look at the 12-month change from a percentage standpoint among the big banks, she's a winner. As a CEO leading a bank and having the stock perform. Now, in fairness to everybody else, 49% for Goldman Sachs is no slouch. Right. And 49% Morgan Stanley, no slouch. But I feel like Jane Fraser doesn't get talked about as much as some of the others. And she's got a stock that's up 52.3% over the last 12 months. She has, year to date, by far, the best performing big bank stock in this market.
With more to go. Go ahead, Steve.
Yeah. What I'd say is that people vote with their feet, and what has been the stamp of approval on this is if you take a look at who she's been hiring, who's been willing to join Citi. It used to be the place where bankers went to die. Now bankers that are in the prime of their career at other firms, great firms like a Goldman, for example, are moving over there. So they know what's going on. They can go under the hood. So that's the justification for the stock doing as it has. Now, I still think it's cheap. This is another one I've looked at buying, just haven't had room in the portfolio. I already own 2 banks, but Jim's had a phenomenal call on it, and it's one I've missed, but it will keep going.
All right.